Smart trader. Today I want to talk about one of the important concepts in trading, and which is finding your buyers in the market. As a seller in the real world, as a seller, first thing you have to do before you start traveling is to find your direction through the navigation system. And so it is with trading as well. You want to find the direction of the market before you start doing anything. So in this model of finding your buyers in the chart, I want to use a three candle model, you understand? And this three candle model, we want to talk about two things, you understand? We're going to talk about using liquidity sweep as one of the method to find your buyers in the three set of candle, and we're going to even talk about how to use Fibonacci as well to find the right place to enter the market. So let's start with the liquidity sweep first. So in this type of three model, you want to see the high of this C1. This is C1, right? The candle one. You want to see the high of this C1 being taken out by C2, the week of C2. You understand? Once the high is taken out, that is your confirmed liquidity right there. And not just that, to have a perfect one, you want to see the candle close within the range of this C1. Although there are other time, you understand, where you may not likely see this C2 closing within the range of C1, and that does not stop the fact that that does not stop your buyers from going short. You understand? There are other things. My next video, I'll bring it up again and show you how you can equally use a formation where even the high of this type of this guy of the high of C1 will not be taken out. You understand? And equally the C2 will not be, the C2 body will not close within the range, but at the end of the day, it is still a bearish formation. But that aside, let's talk about this clean one so that you have the good understanding of how to trade the simple one. As time goes on, I'll teach you how to trade a complicated one. So enough of the talking. So let's go and then, okay, so once the liquidity sweep happen, you understand, on taking out the C1 high, you understand, the market should close within this guy, you understand. Once the market close within the range of this guy, the next thing you have to do is to find your entry for the C1, you understand. And this is where the Fibonacci come handy. So let me show you how you can use the Fibonacci to find your entry point. So this is C1 for this is C2, right? And you want to use your Fibonacci to measure from the high of this, from the high or from the low to the up. You want to use your Fibonacci, and this point that you want to use in your Fibonacci is the 0.5 level. You understand? 0.5 level and 100% level, right? 100% level, right? And so these are the level we want to use. So you are expecting the price to close a little bit below you are expecting the price to retrace to this level. The formation of the moment the C3 candle is forming, you want to see it starting from this level. It should retrace a little bit to this level and start pushing towards the downside. It should not close. The body should not close above this candle, you understand? So it should close within this 50% level. So once it start from the 50% level, it is a chance for you that, okay, the market will likely push towards the downside, you understand? And to have a robust understanding of this thing, I want you to know that the alignment of the time frame must be very okay, you understand? What I mean by alignment, this is it. So if you are finding your signal candle, that is the three set of candle on the daily time frame, the entry point for you should be 1 hour time frame. You understand? 1 hour time frame. Let's say if you are finding it on the monthly time frame, right? This is monthly time frame. The entry that you are going to be looking for is 1 daily time frame. That is the place you are going to find your robust buyers. You understand? To find the robust buyer should be 1 day time frame. And if you are on the weekly time frame, it should be on the 4-hour time frame, which is the H4. You understand? To even make your buyer stronger. It's not as if you are going to enter on the 4-hour time frame. It's to make sure that all of them align, so that once everything align on the weekly time frame, you understand, weekly time frame, you go to 4-hour, it align. It means the bias is strong, and even the lower time frame will likely respect it. So, and again, if you're on the daily time frame, and you see your buyers on the daily time frame, drill down to the 1 hour time frame. And if 1 hour time frame is in agreement with what the daily time frame said, it means the like of the 15-minute time frame, 30-minute time frame will equally respect it, you understand? Because of course the 2 hour time frame are already in alignment. And if you're on the 4 hour time frame, the 15-minute time frame as well should be in conjunction with the 4 hour. It should be in agreement. So once these things are in agreement, it shows that the likes of the 5-minute time frame will equally respect it, and you can find your entry there. So on the 1 hour time frame, you want to use the 5-minute time frame for the scalper. But on the, if you're a intraday trader, once everything align on the 4 hour and the 15-minute time frame is an agreement, it's a good place to enter your trade and hold for maybe a couple of minutes, depending on how the volatility of the market is, and you can equally ride it to the any level you want, you understand? So, but if you are a scalper, you can check the 1 hour time frame for your signal candle, which are the 3 set of candles, then find your entry on the 5-minute time frame. And if you are a super scalper that like to even take it higher, you can go for the 30-minute and 1 minute as your entry as well. So these are the time frame alignment that you want them to be in agreement before you take your trade, right? I hope this thing is making sense to you. So let me show you a live example of where you can see this thing manifesting live on your chart. So this is it. This is our daily time frame, right? On JBP USD. Look at these 3 set of candle right here. This is our C1 candle, right? This is our C1 candle right here. And this is our C2 candle. And this is our C3 candle. So what can you see? You can see clearly that the C2 candle take out the high of the C1 candle, you understand? That is the liquidity sweep right there. And it doesn't just take out like that, it stop within the range, you understand? So it stop within the range. So it validates the whole concept, you understand? So it is a valid one. And again, if we are going by the Fibonacci, let me put up my Fibonacci and show you. If you take a Fibonacci from the high of this level, right, you understand, towards the downside, you see clearly that the third candle, which is the C1 candle, closes start from below it, you understand? It does not start above it. So it shows that this thing is already in agreement. So if we drill down to 1 hour time frame, let's go to 1 hour time frame so that you can see that this thing will align perfectly. So let's go to 1 hour time frame. Okay, just give me a point. Let me pull back and go back to 1 hour time frame. Give me a little minute. Let's find it. Of course, I should be using my replay button, but I'm not on my premium. The account I'm using is not the premium. It's not the premium this thing. You understand? So we are going to where is this guy? Where is this guy? Okay, this is it right here. You understand? So if you go to the 1 hour time frame, you discover that this guy is equally in agreement, you understand? Because after the liquidity sweep right here, look at what happened. Liquidity sweep, you understand? Look at what happened. The market give a change of character, because obviously before now, the market have been in an obvious uptrend. So if you look at it, the market have been forming what we call higher high, higher low, higher high, you understand, and higher low continuously, you understand. But after the liquidity sweep, look at what happened. Boom, the price changed the state of delivery. So the moment it push up again, it came down with explosive sell, you understand. So if you want to enter from this place, you can capture a neat setup, you understand, after this liquidity sweep right here. Sorry guys, pardon me please. So this is it. You after this liquidity sweep, you put your this thing, you can target 1 to 2, and it is going to be easy peasy, you understand, easy peasy, you understand. So very very easy for you, you understand. So this level here, target the fair value gap, you understand, and you are all for you can even get if you want to do 1 to 1, 1 to 2 is good. See, this is 1 to 2 right here, 1 to 2 needs take profit, you understand, and you're already in profit. You want to even take it further, you can do 1 to 3, you understand, 1 to 3. So this thing works, you understand. So you want to make sure that you are following the market in a logical perspective. You don't want to jump into the market randomly. Let's go to 4 hour time frame and let us find this type of three set of candle again. You can see it clearly that it comes in the market. You understand? It comes in the market often and this thing. So this is a typical example again for the 4 hour time frame. What can you see? This is the C3 candle. This is the C1 candle, rather, this is C1 candle, right? And this is the C2 candle sweeping the low of this guy. You understand? The next candle, which is the C3 candle, start pushing towards the upside. You understand? So it is there on the 4. This is on the 4 hour time frame. Once this signal candle forms on the 4 hour time frame, if you go to your 15-minute time frame, for instance, you are going to see that everything is in alignment with everything I want to do. See, if you want to even use your Fibonacci, you can take it from the low to the high. You understand? You discover that the price start exactly at the golden level. Sometimes I use the golden level. I don't use just the 50% level as alone. You understand? I use the golden level, which is the combination of the 61.8% level and the 50% level. So all these things align together to give you a perfect confluences. You understand? Once all these things coming together, your liquidity sweep, your close retracement to Fibonacci level, they are all confirmation. And when two confirmation come together, it is just like a river. When two river join together, it is a confluence point. You understand? And in this case, when you have two confirmation in trading as well, it becomes your confluence. And you want to do your trading based on confluence. You don't want to do it randomly. You want two confirmation to align before you go in, because of course it is your hard-earned money and you want to treat it very well. So peace out for now. I'll see you on the other side. Thank you.